Hello traders, the title of the video is CCI Indicator Trader explains specific CCI trading mistakes. So we have here a CCI chart pattern. CCI form a double top. You see that? It's double top here. Here it form a double bottom chart pattern. Here the CCI form a double top. Alright, those are CCI. Okay, chart pattern. Now, if you look carefully here, I'm going to place a vertical line there. CCI, you can see that after forming that double top, it start coming down where I place my vertical line. So there was this move down, all right, corresponding to this candlestick bar, the smaller one here on top of this long one. So this one, so you were there. So this is a bearish CCI trading setup right there. Now you can see that the price did not go down. The price went up first before coming down. So what is the CCI trading mistake right there? Okay, that is the question. Look at this one also. CCI formed a double bottom chart pattern here. All right, and we were here. So we're here. That's corresponding to this candlestick bar with a long tail. So it went down all the way here. Okay, retest this prior high, and before it pushes up above that pink trend line right there, before people bought it. The first mistake that CCI traders are making when they are using CCI trading strategy, because I recorded many CCI trading a strategy over the years, all right. But this very good example here. The mistake is just traders, look carefully here. There was this high here. Pay attention, look at this. There was this high here. And the price breaks above that high with this bullish candlestick bar. So it's telling us that the bullish momentum is increasing. Now the smaller side candlestick bar that is following that long candlestick bar is telling me that there is a kind of weakness in the bullish momentum because of the size of it. So we have this, you see this long candlestick bar, this long candlestick bar. This one is a kind of an indecision here before we have that double top. Okay, so everybody will be dull. So we know that the price breaks above the prior high is bullish, but now we see a kind of a weakness, or it can be just a pause, price slowing down before going up. Okay. The first mistake that traders who just sell it because of that CCI pattern is that the trend line, the common trend line, was not broken. Was the common trend line broken here? No, it wasn't. So that was the first mistake. So people are just selling, hoping that it will come down. In fact, they are forcing it down, that you must come down. So the common trend line is not broken. The second CCI trading mistake that they make also is that they did not apply a top-down trading method. So we say to traders, the setup is not the signal. It's never the signal. The signal is not the entry. So one must always use a different time frame trading method. So traders that are very new to the topic of different time frame trading method, that you too search the phrase mastering top-down trading method by 24 stock trader, DG2, DG4 stock trader, or go to www.stochastic-market.com. Okay, in the home page, place the cursor on the word more, scroll down, okay, until you find the web page that we call a top-down trading method. So that's the second mistake. The third mistake is this: there is a better resistance ahead. Which one? 138.2% Fibonacci extension level. So in fact, either traders are controlling the price here. As you can see here, this is Walmart Incorporated, accounted first wave, second wave, third wave, fourth wave, and now we were calling this a fifth wave. All right, and we see the first move down. Okay, we are thinking of the flat correction, and trader will be expecting the price to go to 138.2% Fibonacci extension level to form the B wave of the flat correction before the C wave. So I've done all these forecasts for a long time. You can see that the C wave is not yet in place. So this is what we say to wave traders. The wave count is one step at a time. So this what we see now going on. Is that now going up? We need to keep eyes on this stock and come back to it and review our wave count. All right. So the second mistake is that traders who, in fact, that's the third mistake, CCI trading mistake. There's a better resistance level. This is what we call a hidden resistance level. So if you are a technical trader and you do not know how to use the 138.2% Fibonacci extension level, you need to go to www.dayprotraders.com. Here it is. And you see, as you hit that level, again, doesn't mean just sell. You want to wait for the common center line to be broken, but here the common center line is finally broken. Look at this one. But it is a very long candlestick bar. All right. So after that, if you see a long candlestick bar breaking the common center line, you draw a line at the high, the low, and the median line, and you'll be expecting the price to come back and retest. You see, when it comes to the median line, you see the median line of that long candlestick bar is somewhere here. Some people try to solve it here. Okay, but it didn't work. It didn't work. They forced it a bit. You can see that near the median line of that long candlestick bar. They try to force it here, but the price just ignore it and push it back up again. All right, but if you want to catch it, if you don't want to miss the boat as it happened here in long candlestick bar like this, at least because I'm using the monthly chart, I'll go to the weekly chart and allow one weekly candlestick bar to break the common center line and to be neatly closed. All right, and then the following week I'll take it from there. But when you are doing that, it's also a little bit risky because you need to control it carefully. So 3 mistakes trader has made here. All right. Okay. Common center line was not broken. Price goes above prior high. Okay. They did not implement a top-down trading method, and the third mistake, there is a better resistance ahead. Anytime this one is so. Suppose you have a trading strategy that gives you a sell signal. Where do you sell? Do you just sell everywhere? You want to sell at a resistance level. So when you want to sell at a resistance level, you ask yourself, is there a better resistance level? So let's look at this one. So we're talking about double bottom here. All right. Now this is another CCI chart pattern, double bottom being formed right there. See, so that candlestick bar with a long tail, you see, it's telling that there is a support there. But why that candlestick bar got a long tail? You see, now there was this high here near this red. Can you see? I don't want to remove my line. Apology. So traders are very new to me and say, George, I'm very surprised why you have all those lines on your chart. I need them on my chart. Okay, please. That's why I leave. I'm not trying to be funny. Okay. So that's the red line there. Okay, red line. This one. Okay. So the price want to retest the prior high. This is the problem. So it's hanging here, which is this is the pink trend line, which is not bad. Retest it. Okay, so people were trying to buy there, but it was important for the smart money to retest the prior high. Here it is. So they push it into that zone where they place order to buy. Those orders will fill and they push it back up where people were trying to buy it initially. So they bought it at the best place before bringing it back where people were trying to buy it. Now again here we have the double bottom. So if you understand what has happened after this candlestick bar, it's a long candlestick bar with a long tail. piercing through the pink trend line and retesting the prior high. The bullish trend is set up, and the CCI is forming a double bottom. So you'll be thinking that it will be turning around here before it turn around, okay? But to be honest with you, as you can see here, I have on my chart this forecast, all right? So you'll be saying, what's going on? We were expecting 1, 2, 3, 4, 5, but the price finding the support. You have to be careful. It's going back above the trend line. For the support above the trend line. And it went back inside this rising pitchfork tool. Pitchfork tool will determine the possible path that the price will take. So we will be very careful, though we are expecting 1, 2, 3, 4, 5. That's why a trader must use, a technical trader must always use the pitchfork tool. It came out of it and I go back inside it. All right. So here again, you see this one. Okay, candlestick pattern trader will take advantage of it more. So this is now this candlestick bar is the one that is breaking the common center line. We have a double bottom. Now the common center line is broken on the monthly chart. If you don't want to wait for the monthly candlestick bar to close, you want to check the weekly chart. And be careful if you're doing with the weekly chart like this. Careful, all right? So now this candlestick bar is closed. The following month, we implement a different time frame trading method to buy it. Right there. So now, look at that. As this candlestick bar is starting, it went down fast. It tried to come back again to retest the edge of the pitchfork tool and the peak line. So sometimes, this was happening sometimes, so they say, I thought that if I master the top-down trading method, I would never have a losing trade. Sometimes it's just a pure luck sometimes, you know, because you've done everything that you need to do. This is what you need to do, by the way, all right? You just do what you need to do. That's it. But you don't want to fail to do the thing that you need to do. So sometimes traders are taken out of a trade, not because they have not done what they need to do. It was just that they were not lucky there. So if they receive a signal and they enter the trade, and then they try to push it down like this, well, they may decide to cut their loss, or they may be taken out of the trade altogether if they do not have a strong stop loss. Now the question, this is why I say to traders, that's why I do not tell traders how to place their stop loss, and so on. So here, normally people will say you place your stop loss few pips below this candlestick bar, which is correct. Okay, this candlestick bar is closed. You implement your top knot limiter. Your stop loss should be below this candlestick bar. Sometimes they may say, oh, below this one. Now the question is, can you afford it, or does it make sense to use that stop loss for talking about the risk reward, the risk that you are taking, and the reward that you are expecting? Does it make sense? Is it breaking the 5% money management rule? So I don't want the video to be too long, so just to touch upon few mistakes that traders are making, because you want to go around learning about many trading strategies around the world, but use the trend line, the common sense trend line, implement a top-down trading method. If the candlestick bar that break the trend lines is too long, hide the high, the low, and the median line. Concentrate on the price and take it like a pro. So here it was not too easy, all right, but finally it went up. Here, you see, is a typical CCI chart pattern, but the price was headed to 138.2% level. Another thing that I will say to traders, you want to be a multi-talented trader. Sometimes traders know about pitchfork tool, or they know about CCI, or they know about Fibonacci, or they know about Elliott wave. But when they are applying the CCI, they forget everything. They say, I'm using CCI. So they forget about Elliott wave, they forget about other. Don't be like that. Like I was telling you now, okay, we have done Elliott wave forecast for Walmart. We're expecting the price to come down 1, 2, 3, 4, 5. So here it is come down, here it bounced up. Oh, everybody was expecting to push it down, and then something I did nicely down, like okay, like God. All right, now Okay, precisely. All right. So when I say like God, I mean precisely. Okay. Now look, it return back the ball that trend line, that pink trend line is here. Okay. All right. Now, where is it going now? It's going to the edge. Now, it breaks the ball at 138.2% level. The next hidden resistance is 161.8% Fibonacci extension level. So, of the price action from here. Okay, what am I? From here to here, the fifth wave. From here to here, we apply. That's the Fibonacci extension. You apply to the fifth wave here. From this point to this point. That's the 138.2%. It's headed to 161.8% level. But before that, there's this resistance here. You see this red one there. The pitchfork tool somewhere up there. So this will conclude our discussion today about CCI trader, explain specific CCI trading mistake. I'll be recording more practical CCI trading video like this when I'll be touching upon few things that traders must pay attention to so they may improve their CCI trading. I hope you'll find this video useful. And if that is the case, feel free to give us the thumbs up. If you think that, George, I'm not impressed, give us the thumbs down. However, if you think that this is an amazing tutorial, feel free to share with your friend on the social media. Okay? Subscribe to our YouTube channel. Our YouTube channel is The Pro Traders. Subscribe today and be sure to click on the notification bell so anytime you record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about CCI indicator trader explains specific CCI trading mistakes. Happy trading to you all, and I will speak to you soon. Thank you for watching.